Hey everyone, hopefully having a good day. My name's Andy. My channel is Finding Value. Today we're going to go over some real estate information. I know a lot of people think the reason I go over real estate so much is because it's part of the thesis, and knowing where we are in the real estate cycle is extremely important. I'm going to go over some other, we'll call it market crashes or areas where the market got saturated with homes. And the way that prices go down is when your inventories basically go to certain levels. And I'm going to kind of describe the inventory levels that we're at today. I don't have any rent prices here. Maybe I should have thrown some rent prices up and the increasing of rent and what the rent prices look like as well. But I have mainly the data for real estate and what real estate's kind of doing in our situation. So let's dive in here. I'll show you what I have. On the left-hand side was the single-family home prices. This is inflation adjusted. So it is inflation adjusted. And when you look at the 1970s, we had this gigantic bull market in real estate. And one thing I wanted to touch on is this went up dramatically from 60s to all the way to 1980 from the median home price of America. This is the whole kit and caboodle. There were areas that went up ridiculous amounts in the 1970s. We're talking 5-10x type area in certain portions of the United States. But the median, I mean, basically you had almost it's not quite a double, but it was a good 60-70% increase in a very short period of time in that 10-year period. But that was also during the same time frame that interest rates went ballistic to the upside. So we had one of the largest booms in home history, going from about 120 all the way up to maybe 170 in terms of pricing, at the same time that we had interest rates go up dramatically. This was the highest point of interest rates. So in history, looking at history, we've had interest rates and home prices go up at the same time. That is very common, and it did it all the way from the 1940s all the way to 1980. We had interest rates and home prices go up at the same time the entire time. We also had a little, basically a crash from 80 to 82, 83. And then we had a boom in the mid 80s all the way to, I would say, late 2000 or mid 2000s. Again, we had an increasing interest rate environment, not very large one, during this boom from 2000 to 2008. We started increasing interest rates a little after 2003, 4, and then we had this crash. Now, what I'm going to do is, we know we had a boom in the 70s. We had a little slowdown basically before 75. We had a slowdown here. We also had a slowdown after 80. This was basically a crash. And I'm going to show you the cycle of inventory during that time frame as well. What we have here is housing production has not kept pace with population growth. This was the Federal Reserve Economic Data FRED, CEA calculations. That's where this information is. This is the housing starts as a share of population. So think of it as housing starts per X amount of people. And as you can see, we are declining over time, where we are building less homes as a percentage of the population. And at some point, this is going to, I think, have to come back up to hit a point where we've got a certain amount of homes given the certain amount of population. I don't know what the sweet spot number necessarily is. All I can say is that this is declining. And if you were to run a trend line, if you were to put a trend line at the top of this, we could be breaking out of that trend line to the upside in housing production per population growth, which means we need to build a whole bunch more homes in relationship to the population. And that could happen, maybe it won't. But we have less homes given how many people there are, according to this chart where I grabbed it from the Federal Reserve Economic Data FRED. Looking on the right-hand side, this is the month's supply. So the blue line is the existing single-family home sales in months supply. The red is the existing condo sales month supply. In 2022, we are hitting very low levels, levels that we have never seen in history. And the people are saying we're in a housing bubble, and I can't tell you with any sort of certainty that a bubble is necessarily coming with no inventory of homes. I mean, that to me seems a little bit ludicrous. Now, the last bubble in 2004, prices were going up. 2005 prices were going up. 2006 prices were going up. And 2007 prices were going up. And look at the inventory. The inventory was rocketing higher. Now we're in bubble territory when you get above about 8 months. In 2007, we knew we were in a bubble. In late 2007, we knew we were in a bubble. In 2008, we were in a bubble. It was a bubble. We could see it before it happened with the existing condo sales and the existing single-family home sales reaching levels above 8 months of inventory. That is when things start to get to bubble territory. The problem is, even under a gigantic boom of housing starts, because housing starts were blowing up during this same time frame. They were building massive amounts of homes, and we could see that the inventory got rebuilt. The model back then isn't the model today. Usually they have demand, they build the house, they sell it immediately. They were building a bunch of homes with no buyers, and they overbuilt. Now, during that time frame, we still had home prices going up in 2006, 2007, and then 2008, it was starting to come back down. It took a couple of years, but our inventories got repleted here. They got replenished. And I'm not seeing that happen. We're getting into a scenario where the inventories are even worse. So I don't know how this is necessarily a bubble yet. We have to see this basically replenish itself, and they replenished it by overbuilding the homes. We're not overbuilding. We're not at that stage yet. So and this took, if you look at it, it went from 2005 to 2008 to get to bubble. It took 3 years of increasing inventories to get there. How long do you think it's going to take here? 3, 4, 5, 6, 7, 8 years? So to say that we're in a bubble and be 3, 4, 5, 6, 7, 8 years from the bubble is way too early. That's not a bubble. But we'll see. We'll see what the inventory levels do. I got these two graphs here I'd like to kind of focus in on. What I have on the right is the housing starts. What I have on the left is the U.S. new single-family months of remaining inventory. This is our inventories. And you just saw we were at 2 months. 2 months is down here. We are below inventory levels all the way back to, I don't know when. It could be all-time lows. And we broke the 4-month barrier to the downside, meaning that we just don't have any homes to sell. So even if we see home sales fall, it's because we don't have enough homes to sell. But when looking at the U.S. new single-family months of remaining inventory, if you look at the 1970s where we had that big bull market in housing, the home price appreciation, this type of movement, we were doing that type of movement in the 1970s, 72 and 74 with a very large real estate housing market, housing starts boom. We had a massive boom in 1970 to the early 70s. But look at our inventory. Number of months of inventory also went up during that time frame. We got overbuilt. We went to 10 months of inventory and 8 months of inventory in 73, 74, and then it crashed back down. The housing starts also crashed back down, and we had a recession in 1973 or 4. We had that recession. That recession was brought on by too many homes. We had too many homes. We overbuilt. We overbuilt the number of months of inventory, and we had too much housing starts, and it got crushed back down. Then we ran again in the late 1970s, 78 to 1980. We had a massive boom in housing inventory and in housing starts from 75 all the way till mid 1970s. The inflation's delayed by a year or two behind this. And there's our big boom. And then we had a big crash all the way to the mid 1980s. A big crash. We had one last boom in early 1980s, and we crashed all back down to 1990. That's this last little boom here. And we crashed all the way to about 1990, and we started going back up again. So last bull market, we built homes and we got way up there at about 12 months of inventory. That is crash territory where we stopped building homes. We stopped building them in 2005, 6, about 2005, and 2005 is over here. We had to ramp it down as the inventory just blew up. Are we seeing similar characteristics to previous bear markets? Do we have 8 to 10 months of inventory? No, we're at 2. Well, how the heck are we going to get up there then? And how long did it take for these to go from 4 months? These were 4 months of inventory all the way up to 8 or 10 months. Well, this one took about 2 years, from 72 to 1974, to get us to crash level territories. Then it hung out a little bit and then finally crashed. It took another from 77 all the way to 1980 for that one to blow up the housing inventory. So from 78, which was basically all these homes being built, put into inventory, they were overbuilding. Problem is, we're not overbuilding. We haven't built anything in our inventory. No inventory. And every time this has crashed and we've had a recession, we've had an overbuilt housing starts, it's declined, and we've had some destruction of credit through housing. And we just haven't seen it yet because we haven't gone through the cycle. So I think we're very early in the cycle. We haven't had a huge blow-off move in housing starts yet. This is all the way at 2015. It got cut off. We are at 1.7 million housing starts here. We also have an increasing demographic coming, which is about 1.8 million in size. So we're not making a headway in adding to inventory at this time. Looking at the active listing count, this is our current data that we have in real estate. And we are continuing to draw down our active listing count, our inventory that is available for sale. You can see the years 2017, 2018, 2019 up here. 2020 was drawing it down. 2021 draw it down. And then 2022, we are at record low active listing counts to purchase. This to me has to reverse for a couple of years to make more inventory, have more active listing inventory before we see a crash. So I don't see the crash yet. And we have at least probably 2 or 3 years away from a crash. In that 2 or 3 year time frame, we could have stocks in commodities go up 20x, 30x. We aren't by the top yet. And a lot of the stocks, if you were to overlay it, went crazy in 08. The beginning of 08 is when everything went vertical. And that's when the inventories were the worst. So I think that we have to rebuild inventory, and then I think we'll get the money transfer to transfer over with increasing interest rates, which is happening right now. It's all happening right in front of us. The commodity boom is happening right before our eyes. And this is the rate of U.S. home price growth and Zillow's growth forecast. I know people will say Zillow couldn't make money in a rising thing. That's because their AI was jacked up, not because their forecasts were bad. Their forecasts were right, but their AI was garbage. But anyway, they think that over the next year of 2022 to 2023, that the price year-over-year change in home prices will be between 15 and 20% year-over-year. And I had, my guess was between 10 and 20%. I put a big range on it. My I would say guess is around 15%. And this is going to slow down. It will slow down. The problem is we haven't seen it slow down yet. So the guys that are saying that it's a bubble, maybe they're right. They're just timing is off. That's my opinion. We have to see the inventories basically be replenished, go to a level that's very high. And I don't know how that's going to happen unless you build the homes and put them into inventory. We're not doing that at this time. We don't have this huge surplus of homes that are finished and put in inventory. So there's no downward pressure on home prices at this time outside of affordability. But the thing is, we had declining affordability massively in the 1970s, and we had too many homes, and the price still went rocketing higher. So what's going to stop this market? Where are the homes going to come from? I understand the demand argument. I understand that mortgage rates are increasing and that homes are becoming less affordable. My question to everyone else is, where are the homes going to come from to replenish the inventory to get us to crash territory? If every time in history we've had crashes when we've had 8 to 10 months of inventory, in order to get to 8 to 10 months of inventory, we need millions of homes, maybe even 4 million homes to get us there. Where are the 4 million homes going to come from? And if the inventory, or if the affordability is becoming not affordable, if home prices are not affordable, then my question is, well, why are we at record low inventories? How come that's at record low inventories? And if that means, if we're at record low inventories, that means that we don't have enough homes to satisfy the demand, which means that if we built a bunch of homes and they are in an affordable area and all of those homes would be sold, how are you going to replenish your inventory? You have to build above what the demand is giving us. And right now, I just don't see a weak market at this time. I'm waiting for the inventory to replenish itself. It's going to take 2, 3, 4, 5 years. I don't think we're within a crash of real estate, the big deflationary crash. And I don't think we're within a couple years of that. I think it's going to be longer. And we'll monitor it. We'll monitor it. I go over the active listing count all the time. And this is important because this is our driver of inflation. This is what's driving the inflation into the system. And if that driver is there and it's still generating inflation, it's going to put pressure on the bond market to sell off and increase the interest rates. So that is where the rotation of money is happening. This is the generator of it. It's creating the money, and then the interest rates follow, and then the money rotates over into our commodities. I think we still have a good way to go, and we'll see what happens. But that's the information I wanted to share. Hopefully you guys know a little bit about the 1970s bull market and the early 2000s bull market. And now you're a little bit better equipped to deal with what I think is the real estate market. And right now, we just have no homes to sell. They're depleted, which means higher prices. All right, guys, give me a thumb up for the content. If you guys like the thought process, definitely subscribe to the website. A platinum membership gets you information similar to this. I go over the thesis. I go over all this stuff with financial education, and then I go over picks that I think will do very well, which is the second. There's two things. You got to get this right and get the timing, the market conditions right. Then you got to get what vehicles are you going to play this with? What are the best options to play the commodity bull market with? And I think I've got a good mixture of both on the website for information. All right, we'll catch you next time. This is Finding Value.